preparing, and to think about, these are the wealthiest people in the world. I mean, these are the people that dictate how companies are run, how things are run all over, employees, that they're cashing out of their assets that they own. I mean, Jamie Dimon has never sold any Bank of America stock in almost 18 or 19 years. This is the first year he sold it. Jeff Bezos has sold some over time, but sold a major holding. The Walton family sold stock in what they own, Walmart. So they're liquidating in assets that they know and understand. So that does tell you a lot about what they think is going to potentially happen.
So real quick, and then we'll get back to the podcast. This article that I pulled up from finance.yahoo is quite alarming, especially after Warren Buffett just sold a ton of his stocks. And this is probably why. This is Yahoo Finance. Warren Buffett cautioned that you should be ready for any stock you buy to plunge 50% or more. Wow. So I don't know how many of you have a 401 or an IRA, maybe just sitting there. But if you've got a 401 or an IRA and you give Noble Gold Investments a call and you convert that into gold, silver, precious metals, even platinum, there's a lot of opportunities right now. And Noble Gold will gift you, to get you started, to add to your collection, 10 ounces of solid silver. You can pick either a 10-ounce solid silver American flag gold bar, or you could get 10 of these single rounds, 1-ounce rounds. These are Trump rounds, solid silver. 1-877-646-5347. If anything, just give them a call and find out all your options. And also check out their great pricing on gold, silver as well, a la carte. All right, let's get back to the podcast. There's a lot of vital information to share with you, and keep being the change the world needs to see, because it starts with you. Here we go. All right, am I excited for this? Collin Plume is with us today. We have a lot to talk about. And ladies and gentlemen, I don't know about you, but it's kind of alarming when you turn on the news and you read headlines about how California is bracing for the big one. And then Japan recently, because they had some major earthquakes out there, they sent out a warning about a megaquake. And then the political tensions that are going on right now. So I think Mexico, the president of Mexico, about a week ago, cut ties with the American and the Canadian embassies. And then Twitter, X, Brazil has banned X, and they just upheld that with the Supreme Court. So it seems like there's a lot of political infighting going on. The market reports that are coming out are wild, but obviously I like to talk to you because you can bring a rhyme to the reason. You can give us some optimism to the pessimism, I guess you could say. But it's great. It's great to see you, man. Thanks for
good to be here too. Yeah, I mean, in terms of the earthquake in California, it could be massively devastating to California's economy if that were to happen, and a lot of it has to do with the fact that most homeowners today, property owners today, are struggling with the already increasing rates of their regular fire and liability policies that they have to keep, for a mortgage. Earthquake is optional; it's not included, and so you look at adding a cost. Homeowners insurance have doubled, sometimes tripled, in places depending on where it is. If you're closer to a fire zone, they've more than tripled. Some people in those fire zones can't even, no one's feeling bad for the really one percenters, but a lot of those people that own homes up in the hills or in some of the nicer areas, they can't even get regular insurance. So they're basically risking self-insurance. So if an earthquake came or a massive fire, it could be devastating to our economy, devastating to even regular homeowners. If we had a big earthquake, California had a big earthquake in 1994, and FEMA had to come in and bail everybody out. But they said after that earthquake that they're not going to do that again. They're not going to bail people out. So these things could have a really negative effect on our economy if we were to have it, and people frankly can't afford the coverage to protect themselves, and that's part of the thing with the inflation that everybody's sort of feeling, is that there's so many different areas of inflation that are not reported in your traditional CPI report. You just don't see that. You're not going to see your insurance costs, your homeowner's insurance, as a line item on the government CPI. They want to show the lowest possible number so that they can just continue to spend money and do all the things that they've been able to. They never want to balance a budget. If people knew that their inflation rate, actual inflation rate was 10 or 12 or 15%, people would be like, okay, wow, let's figure out a way. We got to get things under control. We got to get our spending under control. We got to get this inflation under control. The amount of inflation that we've created, the amount of debt that we've created from, early 2000 to today is like almost 5 or 6 times what was created in the 100 years before that. That's a big number. Obama's the amount of debt we created under Obama's administration was more than all the other presidents combined before that. And we're talking about, we had multiple world wars in the early 1900s, mid 1900s. We have the Korean War, we had Vietnam. So you had all these wars. We had the Cold War, which was maybe the most expensive out of all of them. So you had 100 years of all these wars. Yet from early 2000s to today, we've caused more debt for our country than we did in the 100 years before that with all those major wars. So it's scary when you see these situations where we could have a big earthquake and then you have all these homeowners. And I can guarantee you, I don't know the exact stats, but I can guarantee you it's a very small percentage of people that have earthquake insurance. And they probably need it. They probably, just like if you live on the coast, you probably need flood insurance and, all the things that could potentially, or if you're in a storm zone, but people just can't afford it. That's the real problem today, is they just can't keep up with the exorbitant inflation in a lot of these day-to-day items. And I would argue that an earthquake, it's just a matter of when we will have a big earthquake. And, all the, earthquake experts say it's a matter of time before we have it. What are people going to do? Are people going to be able to cover to repair a home that could cost, $1 million or $2 million or $3 million to rebuild if they don't have any basic coverage in place to protect themselves? So it is quite scary. What's going on with Brazil? That's just a sad example of government just getting too involved and not allowing their citizens to get another perspective on what's happening in the world. It's just a way they do it in North Korea. They've done it in China. They've done it in a lot of different places where they want to control the narrative as a government. And, what they're doing with X, in my opinion, is terrible, because there's so much good information there that people can get through. And you got to let adults be adults and let them determine what's real and what's not real and do their own due diligence. But the idea that Brazil is just completely banning it is quite scary. And then how much farther are they going to go? What's the next platform? Are they going to ban the internet there? I mean, that's what they've done in North Korea. So it's bad for normal people, because normal people need access to shows like yours and information. And it's quite scary what kind of manipulation they're trying to impose on their people there.
It is. And not only that, but just with the financial situation right now. So let's go back to the debt and the deficit. Over 35 trillion in debt, according to one article that I just pulled up from MSNBC, and there's many other people that talk about this. But according to this article, we're going into the U.S. national debt is rising by $1 trillion every 100 days. That's insane.
Yeah. Yeah. And that's, if you look at, or like in 2001, our whole debt of our whole country was less than $5 trillion. Now we're going up by $1 trillion basically every quarter. So yeah, that's the whole thing. And that's why, we've seen such a gold is quite interesting that and I've been talking a lot about this, that no one predicted this gold rush over the last year. And it's because typically gold does not perform well, but when high interest rates are happening, the dollar's strong, right? We kept rates high to keep the dollar strong. That's what we intentionally did as the Fed, to hopefully lower inflation. Gold typically doesn't do well. And that's why, you've seen a lot of U.S. funds not investing in gold until now. They're actually getting into the gold market in the last 90 days. It's been a late surge here in the U.S. Now, China and India and developing countries, it's a major part of their economy. They're continuing to buy gold and silver. They're buying gold mines. They are looking at the future in a much different way than we are. So as a developing country, they see the value of it. They're trying to acquire tangible assets. They're trying to protect themselves against all the fiat money that's out there. So the global demand has been skyrocketing over the last year, but the U.S. has just gotten into the market just recently. And we started to see some of the uptick. And you've seen a little bit of what's happening is some of the coins and the bars have becoming a little bit harder to get. It's because now we're seeing the U.S. market finally catch up to the surge. But it's been an interesting market for gold that we haven't seen the U.S. really catch on. Usually the U.S. is pretty good. Usually we have a good idea. I remember when Obama was in office and he got reelected, the silver price really surged and we saw demand really take off. And the U.S. market was well ahead of that. This time we've been behind the eight ball a little bit on buying in this country. And I've seen financial advisors really change their tune on holding gold and silver. Financial advisors that used to say 1% to 2% are now saying 5% to 8% of your portfolio. I've seen a massive shift in the last few years in terms of holding, and that's with the new price, right? 2,500 gold or close to 2,500. Silver's had a nice pullback for the silver bugs that love silver. It's below $27 today. So we've seen a massive surge in those two things. But the gold playbook has really shifted. It's changed. The typical reasons for people buying these items has shifted from being strictly just a safety play to actually people are very happy with the returns that we've had. Usually on a safety play, you're not as concerned about returns. You're just looking at protection. But I mean, look at where gold's at. It's a year to date. If you go back 1 year from now to today, I mean, we're up 30%. That competes with any other investment out there. And yeah, I've seen people saying, Bitcoin, and they're focusing on those things. And I get it. And obviously it's hard to ignore what's going on in Bitcoin. But at the end of the day, this item does have industrial demand. It does have use in today's central banks are buying it. So I think that you can still make an argument that this asset, even though it's much cheaper than Bitcoin, I would still make an argument that this is a much safer investment than Bitcoin, even in today's environment.
It's gold, man. It's been a form of exchange since the ancient Babylonians. So, I mean, it's definitely held its weight in gold and been around for a long time. But I'm just thinking to myself, with all of this turmoil that's going on, not just the overseas stuff that we're dealing with, but if there is a major cataclysm, such as a major quake that's just as bad as 94 or worse, being 35 trillion in debt as a nation and as expensive as everything seems to be now compared to a few years ago, although that is the new norm, like we've talked about.
Yeah.
Is this going to create could this potentially create hyperinflation?
If we saw a quake, I think it could. And I think a big part of it is the cost to rebuild, right, is already so much higher than it was even 10 years ago. I always joke that it didn't make any sense. You'd go to parts of the country and they could build a house, a full house for $75,000. There was parts of the country 10 years ago you could buy a house for. How could they build a house for? I'd always say, how could they? And it's finally catching up. Is that the labor costs, the construction cost, the actual material cost, is you're finally seeing that surge and making things much more expensive. So if we saw a quake and we had to rebuild, thousands and thousands of homes and structures, the amount of cost it would take to get that much even lumber would be unbelievable. Coupled with the fact that there's all these new rules now, right? You have to build, new houses are going to be built with solar. There's all these things that they're requiring now that make it, more expensive to build and long-term better for the homeowner to have solar panels. But ultimately, there's a very significant increase in cost from 5 or 10 years ago. So yeah, a quake could devastate an economy. Obviously the real estate market, and the builders would be happy because it's been a very difficult market. for them, with these high interest rates. And those rates, we're looking in the next week or two. We should expect a pullback very quickly here. So that'll help the markets a little bit. That'll help the real estate market a little bit. But ultimately, these things have sort of spiraled out of control. And a lot of it is just based on, the faith in our currency and the faith in our bonds. Like, countries just don't have the same level of faith that they did, because we just have such dramatic debt right now. I mean, that $100 trillion in debt we accumulate every 100 days is quite an astonishing number. I mean, we have more debt than that's ever been created in the whole world right now. So what do you do? What are you doing to protect yourself? What ways are you protecting yourself with your money and your investment and your time? It's really something that you have to tackle every day. You have to think about how you're protecting yourselves from these increases in costs and everything from building to health insurance to, you name it. You have to protect yourself from a hyperinflation situation. When you are in charge of a household and everyone's bringing in money, I mean, these are the things that you have to really think about. And, it's important to realize that these are the things that will keep you in a much better position. The fact that you're actively monitoring this and watching this financially, this is what will separate you from the people that are really struggling in their retirement years.
And also, with the elections coming up, Collin, what do you see happening before the elections and right after the elections as far as the markets and the market trends?
Well, it's so interesting, because I always think that I remember thinking about elections, in the 90s and the 80s and the 70s. And there's so few times in history that I think you have the two people coming into office having such different views on what to do with the economy. I mean, there's no middle anymore, right? I mean, it's like, Kamala's talking about the massive increase in taxes that she wants to do. I mean, the incredible increase. She even wants to tax potentially unearned gains. Is on the table. Capital gains tax is on. There's 4 massive increases in taxes that she's proposing. Plus, she came out with this idea that she would want to control the price of food, that she'd have some kind of way to control the price of food. So it's talking about like creating more tax obligations for people and trying to control an environment in the food environment where, every time we've tried to control a market, I mean, look what happened with Obamacare. Like we said things would get better, things would get cheaper. We created Obamacare to do that. And what happened? It's exactly the same, if not worse. It's not a better market by any means for people. Yes, there's people that can get insurance that maybe couldn't get it before. That's been the one sort of saving grace for people out there. Has been uninsured people. And there was, a good amount, 30, 35 million that couldn't get insurance. So there's that positive. But even if they can get it, can they afford it? That's the question. And I don't know if they can. I don't know if those people can afford it. In today's environment, it's just skyrocketed. So it's when the government tries to go in and control an environment that should be run by businesses and controlled by the free market, we've seen what happens. So you have that on one side, and then with Trump, his idea is to keep taxes low, focus on tariffs, creating tariffs, which in a way would cause kind of short-term inflation because it would make the cost of things more expensive, but it would also encourage people to buy U.S. made goods or U.S. products. So that also brings more of the money into circulation here, which hopefully would help with our debt problem. I mean, I've never seen an election potential where the two sides are literally going in completely opposite direction. The only thing that they agreed on is something that would never pass, which is not taxing on tips, which they couldn't do it. I don't even know how they would put that into play. How would they determine, how would they create a line item for servers? to not get taxed on tips. All the CPAs across the world raise their hand and go, hey, how do we do that? So the only thing that they've agreed on is something that would never actually happen. So, and not to say that it shouldn't happen. I'm the first person to tip in cash because, I want them to decide what they're going to do with the money, but it's feasibility of that happening is probably next to none. So, the election is going to be wild. I think it's the most it's going to be the most watched event the next few months that we've ever seen, just because whoever gets in office could change things so dramatically, or in a lot of ways maybe keep things the same, because the tax cuts that are there were already implemented by Trump. A lot of the things were implemented when he was in office. So if Kamala gets in office, it's going to be much more tax, much heavier government control. And so I think people are watching this, very closely. Then you just have all the geopolitical tension out there that could affect the price of gold and silver too. You have what's going on in Ukraine and Russia. You have the Middle East, which is, just boiling over. I mean, there's no end, and fortunately no end in sight with the Middle East. So you have all these things happening that could affect us, globally. And so this is to answer your question. I mean, I think it's the most this election will have two politicians that believe the two most opposite things that we've ever seen in history. There's absolutely no middle. I think if you go back even if you look at Romney and Clinton and Bush, and you go back in the Reagan, and a lot. I mean, there was a lot of similarities in the parties, and now I think we're going in two totally different directions, in my opinion.
It's reminded me a bit of idiocracy in the political spectrum. It's people have it's gone crazy. It really has. And
Absolutely.
I mean, I've got a friend actually that emailed me the other day. He's got a 401 that's just kind of like sitting there. It's been there for a while, and the stocks and the company that he has it with, he's concerned about because of the markets. And I just found an article that is a bit alarming. This is Yahoo Finance. Warren Buffett cautioned that you should be ready for any stock you buy to plunge 50% or more.
He's went into all cash. I mean, he's moved more money into cash than he's ever moved into cash. I mean, even during the 2008, 2009 collapse, he was more bullish on the market than he is today. If that gives you any idea. I mean, we had a full, shutdown. There was no credit available. They had emergency meetings in 2008 and 2009. He's more bearish on the stock market now, and he was bullish back then. So to give you an idea, I mean, he's definitely in a cash position waiting for things. And so, I mean, I've had a lot of people contact us, because it's not just when you don't make any money in your 401k, unfortunately, and you realize that they're charging 1% to 3% in fees to manage to trade within those mutual funds, then it's really devastating. If you were just sitting there and it wasn't, there was no fees being charged, it'd be one thing. But to pay, on 100,000 to pay $2,000 a year when you're going to maybe have a 20, 30, 40% potential pullback, it's just a double whammy, unfortunately. So we've had a lot of people move over, and we've had a lot of custodians. We were having meetings with our IRA rollover team. I mean, the custodians are fighting us right now. They're doing everything. We have one that we've been trying to roll over for a few weeks now, and they've said we've sent the wrong document. They've confirmed, they've lied to us. I mean, this is a major institution, all over TV commercials, and they're basically lying to their client and doing everything in their power to keep their funds there. I mean, and I can't release the name of it because it's such a big name that I don't want to get dragged into something, but it's happening across the board where they're trying to hold people's funds away. And I think a lot of it is there's so much money moving out of the equity market right now because they're afraid. I mean, if Warren Buffett, the greatest probably investor in the stock market of all time, is selling Bank of America and selling, all of his big, large holdings. I mean, he basically cashed out Apple. He moved out. He's sitting in cash. It does tell you something.
And I know this article is a few months old, but it's from Fortune, the great cash out. Jeff Bezos, Leon Black, Jamie Dimon, and the Walton family have now sold a combined $11 billion in company stock. Obviously, that was several months ago, but that was this year. So a lot of big names have been
Yeah.
getting out of the stock market.
Yeah, well, it's better to be a few months early than a few days late when it comes to selling out. So I think that they are, preparing, and to think about, these are the wealthiest people in the world. I mean, these are the people that dictate how companies are run, how things are run all over, employees, that they're cashing out of their assets that they own. I mean, Jamie Dimon has never sold any Bank of America stock in almost 18 or 19 years. This is the first year he sold it. Jeff Bezos has sold some over time, but sold a major holding. The Walton family sold stock in what they own, Walmart. So they're liquidating in assets that they know and understand. So that does tell you a lot about what they think is going to potentially happen.
Now we go back to 2007, 2008. I remember the gold and silver trend was awesome. It seemed to be do really well then. And if we're looking at this time versus 2007, 2008 in the markets, and we're comparing the variables here, I'm obviously not an expert. That's why you're here, but it seems like there's a lot of opportunities in the silver market and the gold market. There was an article recently that came out saying that gold could hit $4,800 an ounce.
Yeah, no, absolutely. These are projections that are based on historical patterns of what's happening. They're seeing what's happening, in the stock market. They're seeing what's happening with the dollar. Also, interest rates. Typically, when interest rates go up quickly and then they pull back, gold goes well. That's what happened in 2008, 2009. Happened in 1994. You can go back to the mid 80s. There's 6 different times in history where rates were high and they pulled them back quickly, and precious metals did very well. 1979. So I think that, you look at these scenarios and you look at the charts, and that's why you have people out there that look at these things sort of long term. And that's why I always tell people is that, when you look at right now the cost of goods and you see where costs of goods have gone, everything that you're buying day to day, could you envision silver hitting $100 or $200 or $300 an ounce based on what you've seen the cost of other things go to? Could you see gold? And it seems crazy to say that, but I remember, last year I was sitting on a number of shows saying that I absolutely predicted gold to hit 2,400, 2,500, and people thought I was nuts. People thought I was totally crazy. And I just said, look at the cost of other things that are out there, like gas prices, energy costs, all the things that we need day to day. Look at how much those things have gone up, and gold had not. So that's what you have to look at. So I know it's hard, but really as an investor, that's what you have to do is you have to look 5 years down, 10 years down, and say, where do you think the cost of these things can go? And also look at where the cost of your day-to-day living could potentially go, and go, how do I keep up with that day to day? Because at the end of the day, that's the thing in retirement is you want to have the same quality of life. You want to be able to see the doctor that you want to see. You want to be able to cover, obviously fix your house in the way that you want. You want to have a smooth and easy, last end of life, and towards that, and focusing on, maybe you need to help somebody out in your family. You want to have a little excess capital to do that. I mean, a lot of people in their 60s, 70s, 80s, 90s are helping. I mean, they did a study about home ownership this year that 13% of home buyers this year borrowed money from a family member. My gut is that that's coming from an older generation, people that are 60, 70, 80 years old. So people are going to want to have that availability to capital to be able to give someone starting out in a family, either a child or some relative, a little startup capital. And a good way to do it is this. I mean, this is startup capital. This is all debt-free, kilo bar. This is all startup capital that you would need in the event that something happened. It's liquid. You have the availability to use it. So it's a good way to protect yourselves in the event that some of the other things are not performing the way that you want. Is you always have that startup or protection capital in place with gold and silver.
Now, I know back last month you were offering, if somebody converted their 401 or IRA through Noble Gold Investments and they qualify, give them a boost to their bank. You're given 10 ounce, like a 10 ounce silver bar, an American flag bar, or 10 single ounce Trump rounds.
Yeah.
And that seemed to be pretty popular. Are you doing something like that this month?
We're going to keep that one. We had such high demand for that one that people wanted to keep that one. So we're going to keep that promotion going for another month. Cool. So this is one of the Trump rounds right here that we have. Or you can get, it's basically 10 ounces of silver, however you want to slice it. Either you're getting rounds with Trump on it, or you're going to get a flag bar. And it's just a little incentive to push you over the hump. We deliver it directly to your doorstep in a nondescript package. So for any IRA or old 401k, you're mentioning your friend had a 401k, once you leave an employer, you can move that. And I would say, even if you don't move it into gold and silver, you should consider moving an old 401k into a self-directed IRA. And the reason is that you're going to pay a lot less money in fees. 401ks are very heavy in fees. It was an instrument that was created by Wall Street, basically another way to extract fees, to create, all of these mutual funds were basically built on 401ks. And so if you think about it, how do they make money? How are all these, all these massive wealth managers, how do they become hundreds of millions and billionaires? Is, American funds and all of these things that were all created for 401ks, and there's all fees within those accounts that they're trading within. So I would say anyone in an old 401k should get out of that vehicle if you can, and get into something where you're more in control and you can really see what is being charged. Even if you stayed in the stock market and wanted to buy stocks, you would just buy the stock fee, whatever it costs to buy the stock. You wouldn't have to pay those fees of them trading. Because what ends up, people don't realize, a lot of times they're just moving stocks around within the same stocks based on what they see as important. But ultimately, there's fees every time they do that. So I've seen fees up to 3% mutual funds, which people were shocked by. And there's been a lot of regulation. They only had to start disclosing fees in the last 6 to 8 years about what fees they were charging. There was a big push for this because there was years and years where people had no idea what they were getting charged. They just saw that they bought the mutual fund for a price, and then eventually it was another price. They didn't realize that whole time within that account, they were charging fees every time they sold. And, a lot of times people, there's no reason to sell some of those things that are in there. You should just hold the things that you have. But obviously they're not incentivized to do that. They're incentivized to keep trading and swapping, because that's how they make money in 401ks.
And that's ridiculous. That's pretty ridiculous. I'm glad I've got my own, where I don't have to pay all those ridiculous fees.
Yeah, you control. That's why the self-directed vehicle is the best. With us, when you buy the gold and silver, once it's stored in the depository, you just pay a fee to keep the gold and silver. It's a flat rate. You're just going to pay a flat rate to store the metals. It's all segregated. So you're not paying trading fees every year when you get into this asset. And over the long term, like the fees, like their fees just skyrocket, continue to go up as your account goes up. With this, once you bought it from us, you're just paying a flat rate. It doesn't go up over time. So the savings can be pretty massive.
I know you got a lot to do today, so I'm going to ask this quick. Can you give us a few more updates on silver and some of the, like we were talking about houses and how they're going to need solar panels? I think that's pretty cool for silver. Yeah,
20 grams goes into every solar panel. The amount of silver that continues to be needed. We've had 4 years of silver shortages in a row, and it's photovoltaic use, solar energy, EV energy. They need it. They need silver for electric vehicles. Whatever you stand on that, it doesn't matter. At the end of the day, they're using it. This is where things are going. They're still going to have some gas cars for the foreseeable future, but more people are going electric. And so you're going to see a lot of that, and they're pushing it. The governments are pushing it. Europe's pushing it. Even if we stayed on gas and Europe's going this way, they're going to electric. So I think those two uses alone will continue to push the price. And that's just one of thousands of uses for silver. So you definitely have a massive shortage right now, and I think the shortage is only going to continue to go up. I mean, they if you go back like 10, 11 years from now, the amount of EV cars that were purchased was a very small percentage. It's continuing to go up every year. So as that continues to go up, they're going to need silver in those vehicles. You need it in the batteries. Obviously, the computers and everything that we're talking on, they need silver. Jewelry, as gold becomes more expensive, silver becomes a very popular option. So people are buying silver jewelry. That demand continues to go up and be exciting for a lot of people. And then I'll talk about this in my book, Silver is the New Oil, but there is no way to actually know, but the amount of silver used in military is quite astonishing. And I'll leak some ideas of what I think the amounts are, but the silver usage in our military in a lot of the weapons that we continue, and obviously they can't be released because obviously there's things happening with our weapons that the government does not want us to know, and for good reason. But there is a tremendous amount of use in military from all the different weapons that we're using, and silver is a big component of that. So that's a whole other usage that I'm going to dive into a lot in my book, talking about that dramatic usage of silver that continues to go up. But you look at it daily, and there's another use. There's always a new idea of how they're going to use it. There's the new Samsung battery that they're talking about. The big battery that people are going to be using that has silver in it. So yeah, silver's and it's priced below $27 today. So it's at a good price, I believe.
That's crazy. That is absolutely crazy that silver's under 27 bucks an ounce. I'm looking at just a few of the predictions. So Investing Haven says it could go anywhere from $34.70 to $48 per ounce by the end of this year. My favorite, though, is Robert Kiyosaki, and he says that that silver could reach potentially $500 by the end of 2024. Wow, that's got to get silver tards excited.
Yeah, I think that's a little bit of clickbait, in my opinion. That's a pretty aggressive number, but I will say, like, if you talk to silver miners, they would tell you above 50, based on how much it's going to cost to pull silver out of the ground over the next 5 to 10 years. Above 50 will be the number. There's no doubt about it. It happened in a year or two. I don't think anybody has a crystal ball, but my prediction for silver end of next year, I think we see mid 40s end of next year. And then if things go haywire, we have some kind of black swan event, and the market kind of goes crazy, then I could see 50 and mid 50s by end of 2025. I could see if we have those. That's why the ranges. You have the $34.80 to $48. A lot of it depends on what's happening in the markets, right? If they decide they got to open up the money supply like we did in 2009 and do quantitative easing, then we're going to go parabolic, because they open up the money supply. I think gold and silver just take off. But if we see kind of more of a normal market, then I think the mid 30s and the mid 40s is probably a number that's more realistic for silver.
I mean, sounds great with me. You were spot on with the gold prices you predicted. So very cool. Very cool, Collin. I really appreciate your time, man. I hope you have a beautiful day. And should people go to, if they want to get ebooks and stuff,
call 877-646-5347. Talk to somebody, tell them that you want to get that, the new book. The new book will be out in the next 30 days or so. So we could put you on the list for that. Or if you're just looking to talk to somebody about how to get some of these items, gold, silver, platinum, palladium, give us a call, talk to a real person, and we're here to help.
Right on. Well, on that note, keep being the change you want to see, Collin. Thank you.
Thanks, Rex.